Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Let's take a look at one of our quotes. Dare to believe. Author unknown. Yesterday's gone, tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow up 44, NASDAQ up 21, S&P's up 8.5. Gold contract flat at $1,293 an ounce. Silver down 13 cents at $19.34 an ounce. Platinum flat at $1,463 an ounce. Copper, $3.16 a pound. Light sweet crude up 62 cents, trading out at 102.12 a barrel. Bonds, the 10-year up 6 ticks at 125.23. The 30-year up, 10-year down 6 ticks at 125.23. The 30-year off 6 ticks at 137.14. 10 and 30-year bond, folks, have gone wide price spread. Accelerated volume this week in a big way. They're going a lot higher. Yields are going a lot lower. King dollar. Up 41 ticks at 80.15. You had the euro down 13 at 136, and the yen is trading flat at 101.53. Our phone number is 877-927-6648. It was called, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Here we go. You're up $6. You're at 1877. We did 760 million versus 750. So what does that mean? Well, what it means is that you got a bounce coming in the market, which should have happened, flat out. The key is going to be, okay, how far does the bounce go? So if we go to the SPY, we take a look at the SPY, this is what you have. Yesterday, and if you want to see the correlation is pretty intense, folks. In fact, let's go through the full correlation right now. So first off, we've been up at these highs since March 4th. So you're dealing with 3 full months, 3.5 months. Your first high that got generated was on March 7th. That high got generated with 114 million shares when you look at the SPY. Then what happened? We come off that high. So remember the 114. 114, you hit a high. You get downtown with 153. Bottom line right there saying, hey, trend wants to go down. Well, we come back up. We retest that high. The retest on the high was 163 versus the 114. And then what ends up happening, you come back downtown with 142. Then we accelerate up. It starts going up with lighter volume, and then we hit the high. Now, when we hit the 169.70 on the 4th of April, folks, we did that with 169 million shares. That was the day that you hit a high, you came off the high with monster volume, wide price spread, accelerated volume. In that particular case, the SPY was down 3 full points. The S&P was down 30 points. What do? We went from 1890 down to 1810. Huge move down. What you also did, though, is you had 167 million at the lows. So the daily lows, the week of April 11th, and the weekly lows, you had a high volume low. That is why, number one, I felt the high was going to be tested because you had that high volume up there. Bottom line, it takes from April 11th all the way over to May 13th to get the test. Now watch how this test come in. The test come in with 66 million shares versus 169 million. Now you come off that high with monster volume yesterday. You come back down with 154 million. What does that set up? It sets up 2 different areas. It sets up, number one, that the S&P wants to test the 1810, and it also wants to test the 1730. Those areas, the 1810 is the April 11th, and of course the 1730 is the February 5th. Now the small caps have already done it. The NASDAQ NDX 100 has also just about been there. We go take a look at the IWM. So when you take a look at the small caps, this is really wild. On the daily, what we had is this. So your benchmark out here is February 5th. That's 107.27 if we use the IWM. We got down to 107.44. Now, this is where it gets really wild. If you have the Art of Time in the Trade, my book, you know that when you go into a swing, if you have expanded volume, guess what? It wants to break it. If you go into a swing and you have expanded volume and you stop before the swing point, that is when it's the most dangerous, folks. And that's exactly what we did. This is pretty amazing what we did here. So watch this, because the expansion of volume is not only dramatic, but you stopped right before the 107.27. The swing point that was out there from the 7th, the week of the 5th and the 7th of February, was 102.27. 107.27, rather. We did 315 million shares there. You go all the way back topside, as the S&P did, and you get up to 120. Comes all the way back down, and this week, folks, we did 318 million shares versus the 315 of the benchmark swing. So now we have, and you close at 109.57. This is building cause, folks, to blow away the lows inside the Russell 2000 of the February 5th swing point. And that's set up there saying that it wants to run back to the 90 mark. Big move. Huge move. Now, let's go over to the NDX 100. This one's a little tricky here, so watch the NDX 100. We certainly came off the lows with volume. When we take a look at this and we put this on the weekly, what you're going to have is that the weekly, this week we did 221 million shares. Now, we're going into 268. We closed at 87.71. It's like, yeah, man, this is interesting. Because what we didn't hit is the 87.88 area this week. We got to a price point of, oh, no, we did. Awesome. Oh, thank you. Thank you. We did. Okay, so check it out. This is important. This is really important. Okay, the 87.88 area, folks, was the high of the downdraft week of April 11th. We did 348 million. This week we did 221. We got over it. We closed under it. There's your failure. So there's an ABC structure on the way down, too. I was looking at this prior to the open. I'm saying to myself, man, I don't believe we didn't hit that number. But we did. We got to 88.61. It only had to get over 87.88. I was looking at 88 instead of 87. So the bottom line, you had a failure there. Okay, so we did, let's go to the Dow Industrials. Dow Industrials, what we did with the Dow is this. She comes off the high, wide price spread, accelerated volume. She's inside the range. If you look, and we'll use the diamonds. We take a look at the diamonds. What you have with the diamonds is this. The diamonds had made a high on Tuesday with 4.1 million. You go downtown with 7.5 million. That's on the daily. On the weekly, what you have is that we tested. This is sweet. This is hard to do, too. So we got to a higher high, 23 million shares versus 38 million, and we closed under the high that was generated in January. So you have a failure. You have a failure, a failure, a failure. What I suspect you're going to see here is this, is that Monday is going to be slow trading day again. You get maybe a little more bump up, and then Tuesday, Wednesday, Thursday, see ya, don't want to be ya. Now, bonds. Bonds have been screaming, folks, that the market's going south. 10-year, you talk about going topside yesterday, went topside in an extraordinary way. We did 2 million contracts. We're at 125.23. We pulled back today with 1 million contracts. This baby is on its way up to the 127 to 128 area. The 30-year is on its way up to 141. And right now, the 30-year, folks, okay, is USM4. US. Oh, so right now, the 30-year, we're trading out at 137.14. You stay right there, folks. Man, Dave White's coming back with us. We're growling and prowling out here. We do appreciate you being with us. We had the Dow finish up 44. NASDAQ up 21. S&P's up 7. We're going to be right back.